We've got a high-energy analysis arguing the recent crash in energy fuels, that's UUU, to around $12 is a huge buying opportunity.
Right. It's based on regulatory wins and production ramp-ups, even with all the insider selling and downgrades. The title says it all. Energy fuels crashed to $12, why I'm loading up now. Okay, so this is a fantastic contrarian call. I mean, right out of the gate. The writers found a high-conviction play. But, and this is a big but, when you make a call this aggressive, you have to be ready for some serious skepticism.
You have to build a fortress around it.
Exactly. If the bull case is strong, the defense has to be even stronger.
That's the perfect place to start. Because when the market sees insiders selling and analysts downgrading, fear just takes over.
It's an immediate red flag.
So I think the presentation of the bearish crime scene is really compelling. It grabs your attention, but the script needs a much more direct, fundamental rebuttal to really neutralize all that skepticism.
I completely agree. You see a stock crash, you immediately want to know why. And to be fair, the writer does a good job laying out the panic drivers. You've got the insider sales, the Roth Capital downgrade to sell.
With that $11.50 target, yeah?
And then just the general sentiment on rare earths cooling off.
Right, but the way it's handled now is, the approach is basically to introduce a competing target. It brings up H.C. Wainwright's, $26.75 price estimate?
Yeah, and that's the core of the weakness for me.
It's basically saying, ignore this bad news over here, because this other firm says to buy.
And that's the friction point. It just lets the reader checked out. They can think, oh, it's just analyst versus analyst, and it doesn't actually resolve the fear.
It doesn't tackle the psychological weight of seeing the leadership team itself selling stock. That's a huge hurdle.
A huge one. We need to actively dismantle the bear case, not just, try to counterbalance it with another opinion.
So the writer needs to shift from just comparing opinions to really deconstructing the bad news and using the facts they already have in the piece.
Absolutely. So instead of just relying on conflicting reports, the writer should directly integrate the timing of the bad news, the insider sales, with the timeline of the good news, the regulatory catalysts.
Okay.
To show why that initial panic was, fundamentally irrational.
That's a great point. But there's a risk, right? If you suggest the insiders mistimed their sale, couldn't that sound like you're blaming leadership's judgment? That might not sit well with an investor.
That's a fair concern. It definitely requires some precision in how you frame it. The focus needs to be on what the market hadn't priced in yet.
Okay, so give me an example. What's some concrete language the writer could use to get that precision?
Well, they could frame the rebuttal by being really explicit about the timing mismatch. For instance, the analysis could say that the insider selling, which was around, November 17th?
Yeah, mid-November.
That it likely happened before the market fully processed the implications of uranium getting reinstated to the critical minerals list.
So you're saying the action itself is a lagging indicator?
Exactly. The language has to emphasize that this regulatory move unlocks huge benefits. You've got Fast 41 status, speeding up permits, you've got potential government funding.
So the insiders made a decision based on the old reality, and the market reacted to that lag. That creates the opportunity. That's a much more sophisticated way to frame it.
It completely transforms the insider sale from a red flag about the company's health into really just an artifact of unfortunate timing, which actually reinforces the whole contrarian thesis.
And you can apply that same logic to the Roth downgrade, right? The writer mentions the crash was partly due to cooling rare earth sentiment.
Which is a side business for energy fuels.
Right.
So the writer should, maybe speculate that the Roth downgrade was heavily focused on that short-term volatility in rare earths. And crucially, that it totally overlooked the massive transition to what was the phrase they used?
$124 million revenue cash flow machine.
That's the one. A machine driven by the Pinyon Plain uranium ramp-up in 2026.
So, by using the superior facts of the main uranium business, which is the real bull case, we show the reader why the institutional bear case is just short-term noise.
You're neutralizing the fear by showing it was focused on the wrong part of the story. It's a really powerful move. It takes the whole analysis from being defensive to being aggressively persuasive.
And that kind of aggressive persuasion, it has to be backed up by crystal clear logic. We've talked about the timing, but structurally, the argument needs to connect the dots better.
I agree completely. To really maximize the impact here, the argument's flow has to clearly define the inflection point. The moment the company went from being a story stock to a guaranteed cash flow machine.
Okay, so right now, the material has the three bull reasons. You've got critical minerals, the Pinyon Plain ramp-up, and technical capitulation. And they're all presented as sort of separate, powerful points.
And the problem is the relationship between the first two. The critical mineral status, the government backing, the FAST 41, that's all the enabler.
Right, that's the setup.
It provides the certainty, the political cover, the secure future for U.S. domestic supply. The Pinyon Plain mine and its $124 million in revenue, that's the result.
And the current structure separates the cause from the effect. It leaves the reader to connect those dots on their own, from this big regulatory shift to the actual numbers on the balance sheet.
And as an investor, I can look at any company's slide deck and see a projection for 2026.
Sure.
What makes this one believable? It's the regulatory backing. The writer has to make that link impossible to miss.
So we need a structural bridge. Position the regulatory news as the key thing that de-risked the entire Pinyon Plain project.
Precisely. The writer should build a really robust structural bridge, positioning that critical minerals reinstatement and FAST 41 status as the key factor that de-risked and validated the whole operational ramp-up. The audience needs to feel that synergy.
Let's just dig into that a little more. Why is FAST 41 specifically so important that it makes the Pinyon Plain projection more than just a guess?
Well, FAST 41, it fundamentally speeds up the whole federal environmental review and permitting process. And for any resource stock, time is money.
Right. Permitting delays can kill a project.
They introduce massive risk, both political and financial. So when the company gets FAST 41 status, the odds of hitting that 2026 target just skyrocket. The regulatory hurdles are minimized. That certainty is what underwrites the whole $124 million figure.
Okay, that's a key piece of context. So how does the writer translate that into actual language in the script? What are some examples? I'd suggest merging the discussion. So right after explaining the government underwriting, the writer could state very clearly something like, this newly de-risked and accelerated environment, which is guaranteed by the urgency of that critical minerals designation, is what allows us to trust the projections from the Pinyon Plain mine. And by doing that, they're framing the $124 million revenue target not just as a projection,
Right.
but as a commitment that is now significantly underwritten by the strategic needs of the U.S. government.
It turns a list of good things into a cohesive investment thesis. The narrative confirms that the shift from a speculative story stock to a validated cash flow machine happened because of these specific policy changes. The causation is clean, logical, and way more persuasive.
Excellent. So we've tackled the market fear, and we've structured the bull case, but an aggressive thesis like this needs an equally rigorous exit plan. Let's look at the strategy section.
The strategy section is clean. Entry at 12 to 1280, targets at 16 and 25. But the stop loss needs some work. While the entry and exit points are clear, I think integrating the hard stop loss more clearly with the fundamental arguments would make the whole strategy section much more robust.
Right. Because the current material just proposes a technical exit, a hard close below 1150. And that's the logical snag for me. It's a pure chart-driven exit, and it feels completely disconnected from the huge bullish thesis we just built.
Yeah.
If I'm the reader, and I'm now convinced this stock is backed by national strategy and is on its way to $124 million in revenue, why on earth would I sell because of a 50-cent price move?
It creates this kind of cognitive dissonance. You're left thinking, the fundamentals are a lock, but my exit strategy is based on short-term chart noise? It almost feels like a lack of confidence in the core idea. Exactly. We need to elevate that strategy. The suggestion is to reframe the stop loss. It's not just a technical line in the sands, but a fundamental failure mechanism.
Okay.
The idea is that if the market pushes the stock below 1150, it means the market is actively rejecting one of our core assumptions.
That's a huge shift in perspective. It's telling the reader that the strategy isn't just about managing risk on a chart. It's about confirming whether the entire thesis is holding up. But how sure are we that 1150 is the right level to tie to that kind of fundamental failure?
While the 1150 level is significant because it's the Roth Capital downgrade target. So if the stock trades below that key psychological and technical level, it suggests the market is siding with the bears.
Despite all the good news.
Right. We're using a technical point as a proof point for a fundamental thesis.
So the exit isn't just, the chart looks bad. The chart looking bad is proof that the market isn't buying our story. At least, not yet.
Correct. And we need to give the writers some concrete language to bridge that gap. We'd propose adding some context to that $11.50 stop loss. Something like, if the stock breaks this historical $12 support, closing hard below $11.50, it suggests the market has fundamentally rejected the immediacy of the Pinyon Plain cash flow ramp-up. Or maybe linking it to the regulatory side. Something like, a sustained break below $11.50 would indicate that the market has either fully priced in the critical minerals benefits, or it believes the FAST 41 status won't translate to immediate revenue.
Those are perfect examples. They turn the entire trading plan into a measurable test of the fundamental argument. It says, I'm betting on this regulatory arbitrage and this cash flow certainty. And if the stock moves below this level, it tells me my core assumption about the market's recognition is just plain wrong.
That kind of integration really strengthens the intellectual rigor of the whole plan.
It does.
Okay, this has been crucial. We've really transformed a compelling but maybe defensive thesis into a robust, integrated investment strategy. So to summarize the key points for the writer, first, enhance the rebuttal against the bear case. Actively integrate it with the positive catalysts. Use the timing to neutralize the fear. Don't just cite other analysts. Second, they've got to create that stronger structural bridge to define the inflection point. Show that the critical minerals list and Fast 41 status are the enablers that guarantee the results at Pinyon Plain.
And finally, elevate the strategy. Connect that technical stop loss to a fundamental failure of the core investment thesis. Make sure the analysis and the risk plan are logically aligned.
These changes are going to significantly strengthen the persuasiveness and robustness of this analysis. It'll transform it into a fully defensible, high-conviction strategy. We really encourage you to implement these changes and resubmit your revised analysis for another critique. Until then, keep refining your work.